Hi, my name is Chris Buncic. I'm the President and CEO of Ascendant Resources. I'm here today to discuss with you the fourth quarter 2018 and full year financial and operational performance. 2018 represented our first full year of normalized operations at El Mochito, and we produced 91.4 million pounds of zinc equivalent, up 38% from 2017. In the fourth quarter, this was 23.2 million pounds of zinc equivalent at a grade of 7% zinc equivalent. In addition to the improvements we made at El Mochito this year, we had a few notable accomplishments that we are quite proud of in the past 12 months. Notably, in August, we closed on an acquisition of our interest and option in the Lagoa Salgada project in Portugal, which is on the Iberian Pyrite Belt, and we continued with our drilling program there with results out this past February. In October of this past year, we announced the results of our preliminary economic assessment of the expansion project at El Mochito, showing robust economics with a 58% IRR, a 2-year payback, and most importantly, a reduction in our all-in sustaining cost to 97 cents zinc equivalent pound, which sets the mine on a path towards profitability given the long-term expectation for the zinc price. With respect to our financial performance in Q4 of 2018, our strong production of 23.2 million pounds of zinc equivalent metal, highlighted by 7% zinc equivalent grade, drove revenues of $21.6 million. At an average cost of $85.38 per ton, or 83 cents per pound zinc equivalent, this resulted in adjusted EBITDA of negative $0.1 million and a net loss of $3 million, or a loss of 4 cents per share. In 2018, we produced 91.4 million pounds of zinc equivalent metal, as mentioned. This was at a grade of 6.5% zinc equivalent, resulting in revenues of $85.6 million. At a direct operating cost of $78.98 per ton, or 79 cents per pound, this resulted in adjusted EBITDA of $13.5 million and a net income of $3 million, or 4 cents per share. A few things to note with the Q4 financials and also the full year is that on an absolute basis, our costs have been relatively consistent, and going forward to 2019, we see areas of improvement. Early in 2019, we finished the crosscut to Esperanza, which has the effect of reducing our haulage distances and thus should reduce our costs associated with trucking. And also other improvements in the mine, including reduction of water in the upper areas, should reduce our pumping costs. So there are a large number of projects that we continue to work on to help us reduce these costs going forward. One of the areas of focus this year will be on increasing our conventional mining activities in the mine, and this is focusing on higher grade ore bodies. Now, these are typically mined at lower volumes, but they're much higher grade, and so the effect is to increase our revenues, and while they might come at a higher cost on a per ton basis, on a payable pound basis, they are much lower. We announced in February the results of our updated resource estimate at the Lagoa Salgada project, in which we doubled the resource to 20.6 million tons at an increased grade profile. Based on these results and the drill targets identified by these studies, we think that there's great potential to further expand on this resource in the future. Also in February, we announced the non-binding term sheet from a financier for the El Mochito expansion project. We hope to finalize that soon and provide the market with an update. Overall, we're very pleased with our performance in 2018. From an operational perspective, we've hit a lot of the milestones we set out to achieve, and despite the headwinds from the commodities markets and prices, we think that 2019 will be another great year as we continue to grow this business.